Hi folks, it's Adrian CryptoBirb speaking. Welcome to today's Friday webinar. CPI data has come through. The markets have reacted. Bitcoin has taken an actual stance to the downside locally, right? However, it's on a bullish trend setup on a 12-hour chart, which is my favorite time frame to actually watch and observe. And there's so many interesting points. There are so many interesting charts to have a look at, and that's exactly what we're going to do during today's webinar. So if you're ready to hear this and more, make sure to stay tuned because we are going there right in a second. Welcome, everybody. This is Adrian Zdunchuk, CMT CryptoBirb, your host for today's webinar. And during the next 30 minutes, we're going to actually have a deeper dive into the markets, into the realm of the financial markets in the traditional sense, and in the more new digital sense that Bitcoin is actually proposing out there, right? So we know that the markets are not trading in vacuum. Whatever happens on one market tends to correlate somehow into what's happening into another market, right? Bitcoin is strongly attached to S&P 500 at one time and one occasion, and on another occasion it trends completely in a different way or very independently in a way, right? So lots of interesting points of the discussion today. Please let me know, guys, how you are doing. Drop some comments, drop some notes if you can hear me, see me fine, that everything is all right on your side. What's the temperature up like where you are, where you're writing from, where you're coming from, what is the location that you're watching that at. This is super interesting, super intriguing to see and to discover, right? Because the community we've got on the Burbness ever since 2017, growing and counting, it's incredible how talented you guys are. There are so many talented people, so many talented, great traders that really want to somehow contribute, to the community, to the broader spectrum of crypto groups, of crypto people, crypto traders. And if you're watching that, congratulations, you're one of them, right? You are ahead of the curve. You're early. You're very early, ladies and gentlemen, because you're at the early stage of the bull market, right? Bitcoin bull market started in January 2023. The markets have rotated higher into the most bullish pre-election year on the candidate on the record, right? 83 out of 84 years turned bullish, right? Closed higher than they opened during the pre-election years in 2023, just like 2019, just like 2015, or, well, guess what? The best candidates for giving us very profitable pumps and movements. Rick is saying, hey, Rick, my man, look at this handsome guy. Beautiful sunny day here in Victoria, BC, Canada. Good to be here again. Adrian, love your shows. Rick, you're a legend. Good to have you, man. Good to have you. Long time since we saw each other. There's Tragic Garlic again. Great name. Racing home now to get to the start of the live stream. Boom. And that was about half an hour ago. So hopefully you managed to get it up here. And again, the crowds are not, I should say, here, right? When you think about it, when you compare that with what was happening at the peak of the bull market, November 21, you were watching that 100,000 people basically for video, and there were 50,000 people watching the video, 60, 80, 160, 150, etc. Right now, it's about probably 1, 2, maybe 3,000 at times occasionally. However, what that means, right? It means that by being here, you mark your presence to be in the minority, and this minority is supposed to give you the chances for winning, right? This minority is the veterans, the people who survived the bear market, a very difficult crypto winter of the last year with very rampant inflation, which is coming down, right? Which is coming down, which is something good and positive overall, because what it translates to is that it translates to more ease, less tightening ahead of for the monetary policymakers. And easier markets. Easier markets means more liquidity, means more capital in the markets, more comfort, convenience in trading, investing, spending money on investments, which in turn can pump the markets, right? So we are going to give it a little bit of a quick look in what's happening in the market. And like I said, one of the pioneers of intermarket technical analysis was John Murphy. That John Murphy, the creator of technical analysis of financial markets, one of the technical bibles, if you will, in a way, right? So the whole point is that, again, the markets do not trade in vacuum. What happens in one market correlates and depends on what's happening in another market at the same time and place, right? So let's have a look at what's happening with a little bit of just a brief overview. So the major markets, Dow Jones Industrials is a little bit up in the green, almost 0.1%, which is kind of like interesting, right? Because it's correcting a little bit after very significant push, off the March lows, right? We were seeing 31,500 being tested all the way up to kind of like retest the ultimate highs of 34,500 approximately. Then the significant major breakout to the upside up there. And ever since the powerful rally towards 35,500s, right now stalling a little bit closer to 35,000, right, which is where the 20-day support is. 20-day moving average. This is a short-term trend, and short-term trends often work as this benchmark, as this point of reference, frame of reference, creating this so-called behavioral anchoring effect. So that we kind of like out of luck, we tend to wrap our minds around specific numbers. Those numbers tend to be round, right? Because they are easy to remember. And the more people use them, the more quote unquote magical effect it may actually impose and have, right? Because most of the traders, most of the people would use it in a very interesting way. So the same way you would buy support and sell the resistance. Well, why would you do that in the first place, right? So this kind of like automated magical thinking, so that it doesn't matter what's the process behind it, so I just expect the result because everybody else is doing that, right? So it doesn't even need to make sense at all, right? Because same way the round numbers like 30,000, 20,000, 100,000, people tend to fear of those numbers, and fear those numbers much more than they would fear any other number that is just much more odd anyway, right? And there's no logical reason for it. It's just that our minds project this difficulty because they are easy to remember, they're easy to reference, right? And that causes orders to cluster around those levels. And what happens then right after is that the markets tend to gravitate towards those prices. This is pretty interesting self-fulfilling effect, and hence the reason why the 20-day moving average at 35,000 points can act as a little bit of a support. The Nasdaq Composite is a little bit down in the red today, 0.8% to the downside, break-in, and this is something critical, I'd say, right? It's broken this positive layer of support and resistance, arguably changing the polarity of the whole move, right? So not only we kind of like started curving down to the downside again on the 20-day mean, short-term trend is to the downside. We are breaking below for the first time in a very long while since the end of April. We're breaking down the 50-day moving average. The medium-term upward trend is reversing, right? At least this is according to the thesis hypothesis of my good friend Axel Kibar, CMT. It is an excellent profession in terms of the chart patterns recognition. He's excellent at that. I really kind of recommend that you follow him. He states often this cockroach theory, this cockroach kind of like a situation where you see one cockroach, there's likely more of those coming, right? So the first kind of like breach of the 50-day average means that there is more likely more of those breaches coming in, which eventually in turn can flip the trend to the downside. However, it's going to be very difficult to inverse the long-term trend, the primary trend, right? You can see that the short-term trends and the medium-term trends respectively and accordingly, deviated a lot against the 200-day moving average, right? The 200-day represents the bull market trend. It's lifting up. There's no way, no room for argument, no room for disputing that. It's just moving up, and this represents the uplifting trend. An uplifting long-term trend is nothing else than just bull market. So we're in the bull market, breaking the medium-term trend into potentially short-term correction, turning into a potentially, again, bigger correction than just a short-term. So we may be looking at an early stage of a reversal, potentially. There's a little bit of a, double top pattern or something. What matters is that support, is not held anymore, right? The support that used to be resistance at the swing highs up there with this ascending triangle pattern, broke nicely. Then it kind of like, again, traded nicely, broke the 20-day moving average support, then it's right now below 13,750, right? Which is actually, again, below the critical support of the 50-day moving average. Potentially closing the week with weakness may actually encourage traders to sell off into the week period, because August and September and October are good for the bears. They're not good for the bulls, right? This is typically where the corrections take place. New York Composite is stalling a little bit there as well, right at the 50-day moving average. S&P 500 right on the line of the 50-day average, right? So it's kind of like do or die, as my good friend Dave Keller, CMT, as well mentioned. It's a little bit of a line in the sun that you want the market to hold. Otherwise, if proven otherwise, this may actually tell you that the market is turning and flopping to the downside, right? So if there's some immediate crash for whatever reason, some black swan or something war related stuff, 4150, 4100 again may work as a little bit of a point of reference, right? Even if it's just for the sake of traders having a look at what the 200-day moving average support is. This may work towards it because of a self-fulfilling effect factor, right? Regardless of the reason, again, we are right now at the support. And this support, consisting of the previous swing highs, right now should have changed the polarity enough to kind of like buck up, right? So you have a conjunction and confluence of the 50-day moving average frame of reference, the previous highs that should have turned into support, right? So if these two concepts fail, this actually brings a little bit of a higher chance to scare traders, right? And to scare traders enough to sell off according to the loss aversion and follow their guts, follow their gut feeling, kind of like forcing them to sell off, which in turn may drop the prices, right? So being down 0.3% is right in the line. S&P 500 may be, after a very powerful rally, finally setting off for a little bit of a cool-off period, right? We'll see how it goes. The That was the composite, right? Which is actually very aggressive stance. It's already broken to the downside, which may be leading at the S&P 500 little or less aggressive large cap stocks up there. However, if we do manage to break the 4450, 4400s approximately, and close a week into that, that would be a bearish pattern for the reversal, right? Otherwise, now let's have a look at a little bit of a closer. Like I said, we are still hovering in a little bit of an accordance and an alignment with the Dow Jones Transportation and Dow Jones Industrials on top, Dow Jones Transportation at the bottom, right? It's kind of like moving similar, which confirms the Dow theory, saying that the averages need to confirm each other, kind of like. So it's not really anything exotic, um, anything odd, anything spectacular. Is just a little bit of a correction, it seems this way, right? However, the trends are lifting up more and more aggressively. The bull market is with us. So the bull market corrections to the downside, corrective waves tend to be oriented against the major trend, which is to the upside. Basically tells you that corrective waves are oriented to the downside, and the corrective waves are short-lived by definition, because the dominant tendency for the market is to lift up, right? So I wouldn't concentrate the long-term trend. However, hedging or preparing yourself for a little bit of a slower 2 months, or something into October may be the actually good candidate to consider. So again, just like I said, right on the line. So for the bulls, it needs to be kind of like a saying holy place right now to reverse, right? Otherwise, if the bullish bastion bursts, the bullish principles kind of like fail for the trends to develop, right? The polarity change principle doesn't work here. It actually causes the pattern to flop and to collapse lower, right? So I would say that if there's an actual, again, breakout failure, or not even a breakout failure, a breakout confirmation to the downside, right? You could have seen basically, you could have seen the breakdown, right? Potentially ranging from 4450 all the way to 4600, right? Which gives you about 150 basis points up there. So 150 basis points takes you towards 4300s, right? Which is this perfect candidate for a breakout retest sequence, right? Potentially getting closer there with the extension of the 200-day moving average, right? So there can be conjunction of a reversal eventually towards 4200s, 4300s. Will that happen? I have no idea. I wish I could tell you. I cannot guarantee anything. I have no idea, because I'm not a fortune teller, right? Technical analysis is not supposed to give you the future. It's not supposed to help you predict the future. That's not what it does. Please let me know, guys, if you can hear me, if you can see me well still, if the internet connection is fine. If you're watching that, drop some comments, drop some questions if you have them, right? Because we're gonna have a look towards the end of the show at one of the altcoins, right? So let me find the chart. Let me find the actual chat, the tweet that I dropped, right, for what's the number one altcoin of this bull market. So by the end of the show, we're going to actually have a quick look at there and analyze one of the charts. So XLY versus XLP. Let me just load it for you, ladies and gentlemen. The risk on risk off ratio, right? That's what it tells you. It's kind of like, again, ever since 2023 started, we've seen, or before that happened, we saw the market rotation to the downside from the peak of November all the way down to the market, kind of like a relative strength bottom in in December 2022, rotating right into the new year to the upside, right? Rotating higher means that the market is basically advancing on the XLY versus XLP, right? So the XLY XLP ratio moves up, which tells you that there is an outperformance of the consumer discretionary, which is cyclical stock group, taking the markets, kind of like driving the markets, driving the economy eventually, against the defensive stance, right? So the defensive stance is not there anymore. There's a clear advance in the market rotation away from the defense and into the offense, right? So there is a little bit of a following this massive rally, higher highs, higher lows, lowest established high, higher low, higher high, clear upward trend according to the Dow theory up there. The curve started curling up as well, which is good, which is positive, because it tells you that there's an actual preference and tendency in the market that is sustained over a longer period of time, and that's not accidental or coincidental, right? Which excludes the chance that this is due to the noise or chaos. So it's a good, well-established trend that is starting curling up well. And we're stalling right now between the ratio of 2 to 2.22 all the way to 2.39 almost, right? So this is a cool local cool-off period. It may actually extend to the downside as we head right into the slower, weaker August and September. That typically tends to be the place for the risk on markets to correct, right? For the to show off relative weakness, and if that happens, the ratio is likely to climb, or I should say, the fall lower. We're gonna see if that is the actual case. Energy has actually broken to the upside, right? So again, the market turned higher, right? The market turned higher in the weakness of the relative strength side against the S&P 500, right? This is the actual relative strength ratio, XLE versus SPX. It's telling me that the energy is outperforming the S&P 500, which is stalling or taking a move to the downside, right? While the energy is performing well. So this disparity is strong enough to show off that there is a relative strength trend breakout, and the energy thrives when the other risk on markets can actually just stall or collapse in a way, right? So there is this decent symmetrical triangle patterns breaking out to the upside very reliably. It's above the 200-day moving average trend, which is slowed significantly. However, it's still lifting up. So this is a still bull market for the energy. However, it's slowed down significantly, right? So we are right now heading close to the actual highs, to the all-time highs for the energy sector, and within this massive 1-2 year rectangle, right, between 92 points and 63 points approximately. So if there's an actual breakout to the upside with a consistent confluent up, again, just confirmation that there is some follow through on the next day, on the next week, on the next month, that the trend is sustained, other than it's kind of like capped, and then there's a reversal pattern, with the Wyckoff distribution, whatever you name that, doesn't matter, right? Because if you have a consistent chain and flow of lower highs, lower lows, this is what defines a downward trend. And on the other hand, on the other side, you would have an upward trend, which is lifting highs and lifting lows, higher highs, higher lows. And if that is the case, we need to break above 92 units, 92 points for the XLE to actually shine a little bit of a more bullish light. Otherwise, until then, it's a slow-paced bull market, kind of like a reminiscence, echo of what it used to be since 2020, end of 2020 into 2022, right? Because the energy actually started reversing when there was a market bottom for the stocks, right? When the S&P 500 started taking over, which was October, November period, the energy started degrading and stalling, right? So the energy is still a weak performer on a yearly basis. However, locally it's outperforming and locally it's stronger, while the weakness arrives for the risk assets. The 10-year treasury yield minus 2-year treasury yield, right? So the yields are there, the notes versus the bills are basically kind of like telling you about the disparity, the interest rate spread, right? Informing you about the overall preference among the investors, mm, in terms of taking the yields, right? Which one pays off better? So technically, the longer the maturity, they should pay off better, right? In terms of the interest rate, in terms of the yield that you can earn with it, because you're locking your capital for a longer period of time. So you take the risk, and you should be rewarded with the risk premium for that, right? For the brave decision, brave or dumb, by the way, right? It's always the choice that we need to make. So historically speaking, the deep yield curve inversion, the negative stance, right, where the 2 years are stronger and paying off better than 10 years, are typically the inverted yield curve situation. And this is the last time that it happened at such stats in 1980s, right? And each and every single time we went to see the negative interest rate yields spread, right, we would actually again just see and suffer the recession, right? So again, I have no idea. I shouldn't have any even opinion. I don't have an opinion on what's going to happen because I don't know. I only know that what's happened on the left hand side is already a fact. That's something that's happened, right? And each and every single time we would have in the past, in the latest history, on the record, we would have the yield curve inversion at such deep levels, the market, the economy, the business cycle wouldn't evade or escape the actual recession. We're going to see whether the economy contracts or just slows down. So Bitcoin, how it all correlates to Bitcoin. Let us actually see the ACP, the advanced charting platform for from the stock chart up there, right? So let us actually display the chart that is going to be this one, main chart. That's going to show me correlation coefficient against the S&P 500, which is what it exactly does at the bottom. 7-week correlation coefficient informs me that there is a negative correlation at minus 0.33, which is not the strongest one. However, it's negative, right? So what it tells me is that the Bitcoin trend tends to trend inversely to what S&P 500 did on the 7-week basis, right? So it's traded a little bit differently and negatively. Inversely, if the S&P 500 moved up, Bitcoin went down. If the Bitcoin moved down, S&P 500 moved up. If the Bitcoin moved up, the S&P 500 moved down, etc. So it's a little bit of an opposite take. However, there is not 100% convergence, right? There's not 100% coverage, and the markets are not ideally opposite. It's only 33% opposite of the time, right? In a way, when you think about that, right? So then 200-week moving average is of course continuing to moving up to 27.34.0 is actually again potential reason for traders to assume that it may be a support area next to 50-week moving average at 23.653, right? So there is a little bit of a cushion. I would dare call it a support, so that if the market tanks lower, potentially you could expect the market to bottom somewhere between 23.600, 27.300. Whichever kind of like point or altcoin that gets closer to. I don't know. I have no idea. We're gonna see. Let the market tells us. Let the market tell us the story. Jesus, I wish I was a native English speaker. Sorry about my language. So yeah, we're stalling, right? We kind of like again moved significantly to the upside, making the new series of higher highs, higher lows. We are slowing right now, kind of like in the sideways related theme, regime character, if you will, right at the area of previous strength, right? So previously the market showed strength until it actually broke to the downside into the bear market, right? Right now we are not in the bear market anymore. All the averages, all the primary trend, dominant trends tendencies are moving up higher, right? It's a short-term correction or medium-term correction in the bull market. Do not confuse that the opposite, right? It's not a bear market. It's not a bear market rally. It is a bull market rally that has just curled down a little bit to retrace and to correct, which is natural. However, corrections in the bull market tend to be good buying opportunities, right? Because the market on average tends higher, right? That's what you know. So positioning yourself into the bull market territory up there, into the buying into the signs of strength after the corrective period is actually a good choice more often than not. What Bitcoin does, it's down 0.33%, if I'm not mistaken, if we're to trust it, at even less, 0.26% as of now. The 200-day moving average, again, the primary trend. This was the primary trend on the left-hand side on the bear market. This shit is not a bear market anymore. I'm so sorry, bears. You're wrong. Jesus, I hate saying that. However, it's true, right? There's not a single person healthy and sane on mind basically to tell me that this curve is turning down. It's moving up as hell. There's no way for anybody ever to deny that. And if you deny that, basically, that is sourced and backed by cognitive dissonance, right? The rejection of the reality, and that suffers the consequences later, right? So regardless of what my stance is, I don't know what's going to happen on the right hand side of the chart, right? This is a little bit of a guessing uncertainty. What's happening on the left hand side is a fact, and this is a fact that we've been moving higher on average since February, March periods, right? Since Bitcoin actually broke above 20,000 and pulled back right there. And if you remember correctly, I actually just dropped a bomb tweet that I was buying there, right, as well, among any other purchases. So me being a trend follower, I lose 70 out of my 100 trades. I lose 70% of the time. 7 out of 10 trades are losses. However, the losses are small because they come from a chop, right? So the market turns choppy after a strong period move up. It turns choppy, I get stopped in the sideways period, right? So the longer it extends into the sideways, I get chopped on the top, on the bottom. That translates to 70% of the time being a loser. However, the remaining 30% of the losses come from exponential trends that just continue to develop, and they're aggressive, with much more velocity, with much more stance, aggression, momentum, thrust, etc. Whatever you name that, it's what makes you money. So I follow the trend, and I follow the trend on the breakout conditions. The breakout conditions need to extend over specific volatility, right? So there is less volume ever since the summertime started on average on the bar side, right? So there's less interest from traders, less volume, less transactions being taken, fewer transactions being taken, which is typical summer price action, which is slower. Again, less cushion, less force, less thrust again for the bullish engines to be on, right? It's kind of like just a little bit of this team. However, there isn't a breakout attempt. So if it breaks to the upside, good. If it breaks to the downside, maybe even better. We'll see. 200-day moving average frame of reference can be used as for this anchoring effect. Traders could be probably searching for support around a level of 2700, 27,105, right? So if I were to give you a good buying interest level, potentially that could be it. So 27,105 potentially could be bought around, right? Note that this level just improves over the time. It's dynamic support, right? It used to be $20,000. Now it's the 27, almost marking a 50% move up in the past 3-4 months, right? Which is not bad at all on average. The bear market's rally failed after 1 month or a couple of weeks. They are short-lived. The bear market's rally do not last for a whole 8 months, increasing 100%. This is not a bear market rally. Do not fool yourself. It is a cleanest example of a bull market, and the sooner you understand that, the sooner you start making money, which is good, right? You make money on the facts, you don't make money on the opinions, and that is true. So regardless of what happens, I have no idea. However, what I know is that a lot of traders are going to be eyeing the 2700s approximately, right? So because of the self-fulfilling prophecy power and strength, it may actually come true. We'll see. The baseline, the B-Pro baseline, is actually a little bit more tight, right? It definitely gave a leading signal on the breakout to the upside, and the bull market breakout much earlier than 200-day moving average did. The simple one, right? There was a couple of months of lag, so only started the 200-day moving average at the previous chart only started moving at the 20K breakout, right? So that happened in March. Everybody. The B-Pro baseline gave the breakout signal early in January. So by observing the Bear Pro, you could have made basically so much more money for the 3 months of listing markets up there since then, right? So it's good and worth observing the high quality indicators, just like Bear Pro, which is my private trading system. The baseline is actually right now hovering around the 28,500 support. It's providing you support at around 2600s, creating this cluster cushion of potential orders clustering right there as a frame of reference. The market is on the bullish side. The 200-day moving average is slowing, however, is moving up, however, it's slowing, right? So if there is a breakout to the downside below 28,500, I could expect, my anticipation would be right or wrong, that it actually maintain lower towards, again, equaling the 27,000 supports. We're going to see about that. However, what worries me if there's a bullish breakout is that there's lack of volatility. For the trend to persist, we need to have volatility. And volatility measured by us technicians, by the market technicians, is measured in not the standard deviation, is measured and not in absolute dollar values measured in the ATR, average true range, right? And the average true range indicator, taking the high and the low of a specific period, basically, in a way, and then averaging it out over the time frame, is below 50-day moving average, right? So this blue curve is a 50-day trend of the volatility, and the volatility, actual daily volatility, is the black dots. So it's departing and detaching itself from the 50-day trend. So it's below, heavily underperforming the medium-term volatility trend, right? So it's not the most convenient situation for the bulls because it promotes chaotic, noisy, mean reverting environment rather than thrusting, powerful, trendy, etc. Right? So this more likely, maybe, even if this is a little bit of a guessing, I'm not making any trades based on my guesses anymore. I was wrong 50,000 times. I lost hundreds of thousands of dollars, if not millions, by trading on my faulty opinions. I'm not making any opinions. I'm not trading any opinions anymore. All right. So what I'm only doing is I'm trying to perhaps set some sort of like a benchmark expectation, right, based on my experience, based on what I've noticed traders do in crypto, since it's very behaviorally driven market without this concept of intrinsic value, discounted cash flow, etc., that you have in the stocks with the financial reports. What it tells me is that being this purely technical, right? When we lack volatility, market tends to kind of like chop around. Even when there is a breakout, right, by over specific high or low, right, established within a range, this breakout tends to be of low volatility, so it's not powerful enough to kind of like just give you anything spectacular, aka called trend otherwise, right? So it tends to revert back to the mean, which is approximately on average flat, right? When it does to the same to the downside, so the market just chops around on the failed patterns that perform better in the opposite direction than initially anticipated. So I would say that if I were to make any prediction, right or wrong, again, do not trade based on that. Make up your own mind, do your own research, etc. I would say that if I were to guess and throw a dart into the bullseye, I'd say again, unless we see a major spike on the volatility, the market may fade this breakout and actually fall lower. If that happens below 28,500, it means I'm losing money. But hey, I lose money 70% of the time. I don't care about being right. I care about making money, and I care about making money 3 out of 10 trades, which are very powerful, right? I need 3 trades out of 10 to be profitable, much more than negative up there. So the trend setup is bullish right now. The trend setup is bullish, right? However, the market is choppy. It's bullish since there was a significant current temperature breakout to the upside above the previous resistance based on ATR adaptive, right? So there's a little bit of a confusion. 12-hour chart is bullish according to the trend setup. The daily chart is bearish, which is the thicker trailer up there, high time frame trailer. With the new version of the Burbicator Pro, you can actually adjust those, right? Decide the governor MA type, whether you want EMA, whether you want SMA, HMA, etc. So it's a pretty cool option. It's a new version of the Burbicator Pro that is so much more accurate. So yeah, I'd love to see the bulls want to see a clear breakout above 30,000 best if it's a round number plus this threshold by the Burbicator Pro 30,1778, right? So the bulls really want them for their own safety to break above 30. Let's say give it a benchmark of buffer of a space up there. Like let's say the bulls need to break above 30,200 in order to establish any sort of like a healthy, thriving environment, right? However, it's still going to be limited volatility, so it better be some massive shot like 5,000 per 2,000, 5,000, a candle up or candle down. Bitcoin did that in the past. That is something that would take Bitcoin out of this stagnancy, right? Until that happens, we are pretty much doomed for mean reverting movements. So Bitcoin bulls on the 12-hour chart are right as long as the stop level of 29,017 holds, right? The bears on the daily chart are right as long as the 31,778 level holds, right? Clear breakout above 30,200 is bullish. Clean breakout below 29,000 is bearish, potentially leading towards 28,000 or lower. The bullish breakout may take us towards 30,000, 32,000. We're going to see about that, right? There's some local noise on different exchanges. However, what matters is that if we were to take one altcoin out of the charts, right, that was the most popular, which one is going to be GameSwift, right? I'm actually invested in that project. That's going to be an interesting one. Again, I'm interested. I'm invested in that project. This is my friend's project. They're running very, very good Very, very good Web3 gaming system. This is not a promo. I wasn't paid to do it, right? Paid to say that. You can just go and check them out if you want. I'm invested. Full disclosure, do your own research, etc. However, that might be interesting. And yeah, why don't we actually have a look? Hang on. I think it should be. I think it should be trading already. Let us try. So I'm gonna take two, real quick. Let's try to make a copy out of that. Make a copy. Let's go Game Swift, and there's gonna be another one that I'll take. I'll just check it out of curiosity, and perhaps you find it valuable. Game Swift spot on Bybit. Of course, this is a short chart history, so it's not gonna be anything crazy, anything spectacular. The hourly candlesticks, or the hourly, I should say, bars. What is it telling me? Not much up there. Let us play the 200-day trend. Sorry, the 200 period trend. What is it going to tell us? Is there any trend? Oh, yeah, there's no 200 bars probably just yet. So how about 20? The baseline. Okay, there's enough. So we are probably just doing just for the sake of checking the Barbicator Pro again. We're looking at some local correction, it seems, right? We're trending down on the 2020 on the 200 period average, 200 hourly bars, right? That's what it tells you. The level line support at 0.13684, the resistance 0.1639, whatever that says, right? So most likely it's going to be a chop on between those levels. That's what it says. However, if there's again major weakness on the crypto side and on the traditional finance side, I would expect that this may actually turn a little bit to the downside. Maybe once it breaks below and closes below 13684, right? Otherwise, again, it's a decent uplifting trend with a little bit of a weakness, right? There's much more orange, which is bullish color, than the gray, which is bearish color. So right now we're just below the average, getting closer to the support. So if we get there, just maybe there is some local bounce, right? This is where the market turned up recently as well. So there might be a little bit of a behavioral trick, and that people will take the bet to the upside up there. If that is the case, then the two anchors, the baseline supported around 0.15 and the level line of resistance based on volatility at 0.1639. We'll see if that happens, right? We'll see if that happens. Okay, so let's take one more, because that was a little bit of the just kind of like was checking it for myself, and perhaps you find it valuable. And Ethereum, let's take Dima. This is a very, very, very good person. He's very active on Twitter. Like this guy. Ethereum, let's have a look at Ethereum. What is Ethereum doing? All right. So it is going to tell us. What is it going to tell us? What is it going to tell us? I cannot remember last time I checked Ethereum. I'm so much more Bitcoin focused. Okay. So it's going to be on. There you go. That should be the trend. This is Bitcoin. This is Ethereum. Let's take up this one, right? This is 12. I want a daily chart. Again, low volatility as well. 200-day moving average. This one is. Let's actually turn off BPro. So what it tells me is. Actually, maybe let's keep the BPro size in here. Right. Let's get it together. 200 baseline. We can give the medium term. Sorry, the current time frame trailer. Let's turn off the BPro view up, the scalper trend filter, and the level lines. So let's just focus on the trends, right? So the trends are the 200-day trend is bullish. However, it's less bullish than Bitcoin's. It's lagging against Bitcoin. Right now, it's much more sideways for the baseline, BPro baseline, than it is for Bitcoin, right? It's just turned to the downside with the bearish trend setup. However, it's chopping around. The bearish trend setup locally is still close to the support area. So if there is a significant breakout below, I'd say 1800s or 1750 or something, with a decent follow through to the downside, I'd say we may see a little bit of an extended correction. However, the 200-day moving average rises, right? So this is a bull market. Clearly, is just slowing down locally, similar to what Bitcoin did. And that is, ladies and gentlemen, what I've got for you for today. So before we go, I want you guys to take a couple of takeaways, right? So again, losses are inevitable in this game. You need to understand that you're only responsible for both of your wins and losses, right? There is no other politician, any external factor that is going to lose you money. It's yourself winning or yourself losing. As long as we understand that there is no chance to avoid losses, that the losses are inherent element of trading, then it's only about focusing how to manage it well. And once you master that, you master trading and you become profitable. You start making money. And if you need help there, make sure you hit the subscribe button, smash notification bells, hit the like, and leave a comment on our YouTube, and get our subscription to the free calls only with Bybit. This is our official partnership at thebirders.com/Bybit. Go for it, claim your free trading calls. And this is where I'm going to see you guys on the next weeks. God bless you. Thebirders.com/Bybit. I see you around. Thanks for tuning in. Bye-bye.